Hello, this is Melissa, your insurance exam queen, and we are here on this channel to help make sure you can pass your insurance exam with ease and confidence.
The very first policy we're going to look at is term insurance. Now, this is what I tell my clients. You are buying a two-clause policy. The first clause says if you live, you pay. You get to pay again, okay? If you die, then the insurance company pays. And that's the whole policy. Term insurance is very simple in its basic concept. It's death benefit only. There's no extras. Can you put extras on it? Yes, you can, but it's the cheese pizza. It's just, this is the basics. You buy it to protect the people you love from you dying early. So that's all there is to term insurance. Now we're going to complicate it up a little bit, but you want to start with that. This is a death benefit only policy. So because of that, it only lasts for a specific amount of time. So we call term insurance temporary insurance. It only lasts for a certain amount of time. How long? It depends which policy you buy. But there is a time when this ends. Okay, that's the nature of term insurance. It's meant to be for a temporary situation. Now, if I'm not making sense or you don't think I'm telling you the truth, challenge me, okay? Not arguing, but let's make sure it makes sense for you. So the first thing we're going to remember about term insurance, it is temporary. In fact, some of the test questions will give you clues about what policy you should get. And in the question, they'll use the word temporary. That's a clue to you that the answer is term insurance. Okay, so you'll look for things like that. The next thing I have is term insurance is our lowest cost policy. It's age rated. That means that as we get older, the price of the term insurance increases. But it doesn't matter. If you're 50 years old and you say, oh, it's a lot more expensive now, still for a 50-year-old, this will be your lowest cost policy if you're going to start at that age. So it's the lowest cost policy and it is age rated. Now, I made these numbers up to make a point. And, you know, this is not unrealistic. So if you want to buy a certain amount of insurance and at age 25, it costs $215. If you wait a year, it's going to cost you $220. Notice it doesn't go up very much when you're young and in your 20s. It goes up, but not a lot. Now look at the change from 25 to 35. That's like a 33% increase from 215 to 340. Now, once we start getting up into what we'll call the age of wisdom.
Thank you.
Now it gets to be a little more serious. The exact same policy cost a 45-year-old $515 or a 60-year-old $800. So what we find out is that term insurance as we go along in our life becomes really cost prohibitive. A 75-year-old is not going to buy term insurance, okay? It's going to be outrageously expensive, and it's still going to end. There's a good chance you're going to die when it's expired. You know, to make this worthwhile to your family, the old joke is hurry up and die. Because you know, if you have the policy and it expires, you gave money to the insurance company and, oh, that's a ripoff. Well, do you want to die? I mean, did you buy this because you want to die? No, what we buy it for is for protection. So we can sleep at night knowing that if tomorrow is the day God calls me to the choir, my family's going to be okay. It's that peace of mind we buy it for. We don't buy it hoping we die. Right, let's just tell the truth. But for term insurance, we want to remember a couple things. It's lowest cost, it's temporary, and as we age, it gets to be really expensive, okay? Well, all insurance is expensive as we age, okay? There's no bargains out there as we're in the 70s, but term insurance in particular, because of its nature and it's temporary, at a certain age, it doesn't make much sense to buy it, okay? Now, I'm going to start off with the first term policy. Now, I'm going to tell you something. So, but just be our secret of three of us. I don't have a single insurance company that sells this policy anymore. But it's a very important policy to help us understand how this works. An annual renewable term. The word annual tells me that every year you get a new rate. So every year when the policy renews, your rate will go up. It goes up every single year. But the word renewable means you can keep the policy. You keep renewing it, but every year the price goes up. And as you saw from the first slide, when you're young, it's not a killer, but nobody likes to have in their budget a bill that you know every year it's going to cost you more than it did this year. So for that reason, a lot of people say, can I get a policy that doesn't go up every year? And the answer is yes. Just ask us, we'll make it. But the big thing about an annual renewable term is it increases every year. So how am I going to remember that? Annual, right? That means every year. Any of you are gardeners? Isn't there a flower that's an annual? Every year it blossoms. I'm not a gardener. My wife is. So sometimes I hear her talking about it, and sometimes I even listen to her. Not a lot, but I listen to her and then I get it. But an annual is it goes up every year. More about rates. You can buy a 10-year term. Well, how does that work? What we're going to do, let's say it's 25 to 35. And we know the annual renewable rates every year. We're going to hit kind of an average. And we're going to charge you that for all 10 years. So your rate will stay the same. When you're in the early years, you're actually paying a little bit too much. So that as you get in the later years, years 8, 9, and 10, you're paying less. The insurance company still gets the same amount of money, but they just let you budget your payments, okay? So you can get a 10-year term, and the advantage of the 10-year term is you know what your rate is going to be for the next 10 years. So for that reason, insurance companies had a hard time keep selling annual renewable terms. This won't be on the test, but you got to know what it is. What's an annual term and what's a 10-year term? On top of that, you can buy a 20-year level term. Now, how's that going to work, Peter? Well, we got to find the average over the 20 years. So the rate will stay the same. So let me just see if you're following me. You have an option of buying a 10-year term or a 20-year term. Which one's going to cost you more to purchase? You don't get kicked out for making a mistake. Just give me an answer.
The 10-year one?
It's going to cost more?
Uh-huh.
That's not correct because, okay?
Okay.
Insurance company going to get to raise your rates in year 11, right? You're going to have to get another 10-year term, and guess what? They're going to charge you a new higher rate. In a 20-year term, they cannot raise your rates for 20 years, so they're going to start you off higher.
Okay.
So the longer you want to lock in the rates, the higher it starts at.
So if you're 35, you can buy a 20-year level at the same price. It's going to stay the same price for 20 years, right?
Yes. Yes.
And then after 20 years,
if it's renewable,
if
you
it's
can
renewable,
you can renew it at age 55 rates.
okay.
When you renew it at what we call your retained age. So for 20 years, you know what it's going to be. If you want it at age 55, you're going to pay more.
Right.
Okay.
So I have go ahead, Ingrid.
No, go ahead, Mark.
This is kind of a personal question. So if I'm 65, let's say, you can tell me, Peter, am I better off getting a permanent policy or a term? You can tell me.
Well, the only way I can tell you is I need to know what your needs are. I mean, at death, what are you trying to accomplish? Are there people you need to provide for? Are you just buying funeral coverage? Are you going to try to create an income for people? Are you trying to create a trust fund for your children? Now we're starting to talk about a lot of money, right? So it really depends what you feel your needs are.
I see.
And then once you know an amount, yes, I think that some point in our lives, you need to get some kind of permanent insurance because you could live to 100.
Well, that's what my plan is.
So in which case your term insurance isn't going to exist, right?
All
The
right.
policy you're going to have that lasts that long is a permanent
Right.
policy because it doesn't
Okay.
go away.
Gotcha.
But that's extra money. Permanent's more than term.
Right.
So there isn't a simple answer, but you got to start by saying, what do I need? And then how can we solve that? But that's a little beyond what I want to teach right now.
That's okay. It was a personal kind of question, so go ahead.
And that's fine. I don't mind that. So we got that. When we get a level term, the rates are going to stay the same for those amount of years. The more years you want to lock in, the higher it starts. It starts at a higher level. Okay, now term policies. Level term, the death benefit stays the same. But there's two other term policies you can buy. You can buy a term policy that's called decreasing term. And with a decreasing term, there's a spelling mistake, Peter, benefit. The death benefit decreases. So you start off at 100,000 and then 5 years from now, you might only be insured for 90. It decreases. Well, who wants to buy insurance like that? It's for people who are covering a debt, right? And you're paying the debt off. So a decreasing term is less expensive than a level term because you're getting less insurance each year. Your payment stays the same, but because your insurance is going to drop over the years, it's an inexpensive purchase compared to level. So people use that, for example, for their mortgage insurance. So that as you pay the mortgage off, you have less insurance, but there's always enough to clear the mortgage for your family, okay? That's a decreasing term policy. So you got a level term, a decreasing term, and then this unusual one is called an increasing term, where each year you're insured for more money. You cannot buy that as a standalone policy. That's a rider, meaning it's an extra benefit you would put on another policy. So I'll give you an example. You buy a policy and you want inflation guard. You want this policy to increase with inflation. So you would pay extra for this increasing term that every year would increase by the percentage of inflation, okay? So that you're buying more, you got to pay for that, okay? But usually with the increasing policy, once the insurance company knows how much they have to increase it every year, they just give you one flat rate. So your rate, what you pay doesn't increase every year. You pay for it, you pay the same payment every year, but they keep getting you more insurance as it goes along. That's always an addition on an existing policy.
Okay.
Not used very often.
Really?
What we want to do here is just know when you see the test question, level term, decreasing term, and increasing term, what the heck they're talking about.
Mm-hmm.
They're talking here about the death benefit. Sometimes people get confused. Peter, are you talking about the death benefit or what I pay, the premium? This is all the death benefit, how the death benefit works. In all of these policies, the insurance company sets it up that your payment is level. You pay the same thing every year, whether it's increasing, decreasing, or level, they'll give you the rate to do that. And then you pay that every year. Are we okay? We still friends? All right. Next one says, term insurance. Question, which policy would cost the most this year? An annual renewable term, a 10-year term, or a 20-year term? You got to tell me what you think.
I believe it's number 1.
Okay, anybody else? Do you want to say something, Margie?
See, that's the kind of stuff that messes with my brain. Because you're talking about inflation, basically. Is that what the question's getting at?
No, I'll tell you what you're doing right now. You're overreading the question.
That's exactly what I do.
Don't do that. Don't overread the question. Just look at the words. Which policy would cost the most this year? Annual renewable term, 10-year term, or 20-year term? So if you're going to buy life insurance, You can buy one of those three. Which one's going to start off at the highest price?
I would say number one.
And you said the same thing, right, Ingrid? Okay. The exact opposite. It's what we talked about before. The
Oh,
longer you want to lock in your rate, the higher you got to start at.
you start higher, so it's gonna go,
So what I'm confusing, I was gonna say the 20-year, but because it's being renewed, I thought it was gonna be higher.
No. Renews means, all that means is you can renew it, but we're going to keep raising your rate. In the annual, we're going to raise your rate every year.
so the
That's gonna-
20-year.
That's going to cost the least because every year the insurance company is going to keep raising your rate. The 10-year at year 11, they're going to jack your rate up. The 20-year, they can't raise your rate for 20 years. So they're going to start you at a higher level because they got to keep it at that for a longer period of time.
So a 20-year is expensive, and then it doesn't really become a level term, but the 20-year starts, you pay the most, if the term is gonna stay the same,
When you get to years 16, 17, 18,
yeah,
you're paying low amount, right?
okay.
Because it starts at a level, which in the beginning is a little higher, but as you age, it's not going up, but you are. And
Yeah.
actually at the end, you lock in the rates and you start a little higher, but you have the peace of mind knowing that I don't have to worry about 10 years from now getting a big increase.
Okay, yeah, see, that's where I get confused. As
So-
Ingrid said, she thought it was gonna be more expensive as you age.
But your rate is locked in.
Yeah, okay,
So if you want to lock it in, they'll start you a little higher, but then you got them. They can't raise your rate for 20 years.
so
So
maybe
that
that's what I should do as a 65-year-old woman, is stay with the 20-year term and then maybe renew it at 85.
They won't renew it at 85.
Well, see, I'm gonna live 15 years past that, so I don't know.
Yeah. So, but anyway, right now, let's just make sure that we understand this. The longer you want the insurance company to keep your rate the same, you're going to start higher. Okay.
Okay,
But in time, that if you live all 20 years, that will cost you less than 10 years
okay,
because the renewal on a 10-year is going to be higher than what you're paying for your 20-year because you're going to be 10 years older.
right.
Okay, she said right. What about you, Ingrid? Are you with me yet?
I'm understanding when you explain it. If I was to see this question on the test,
That's
I
what I'm
would-
talking.
I would
Okay,
go, but
Let's see if we can just think about it this way. The longer, the more you pay. That should be easy to remember. The longer you want to lock in the price, you have to pay more. Because you're making the insurance company commit to you for 10 years instead of 20. So that they're going to charge you more for that.
okay,
That helped me a lot, just what you just now said.
just now, yes.
Okay, word of advice. Take notes, get the video. And when the video comes in, you can pause it and take more notes because you're not going to remember what I just said in 4 hours. I'm not going to remember what I just said in 5
Right.
minutes. So we got to try to figure out a way to get it in my brain and keep it there. Okay.
Okay,
It's a lot of what I say today. It'll go in there. You'll feel good. But then in 2 hours, you won't remember. And
Yeah,
that's
no problem.
okay. That doesn't mean anything about your brain capacity. It's just human nature. That's why we write it down. And I'm a big advocate to make index cards. Make index cards. You go to the dollar store. I don't think dollar stores exist anymore. They upped them to $2.
Yes, they do. I went to
Yes,
pick
they
up
do.
my index cards from the dollar store.
I did
Good.
too.
I
About
thought they were
200.
all $2 stores. So we have one up here called Five Below. It's 5. But anyway, you buy the index cards, make them yourself.
That's what I
But
did.
then you're writing them and every day keep looking at them. And then it's just going to sink in. Okay.
Good. That's what I've been doing.
Great. That's excellent. So now we're going to
Thank
go on to the next one. Term insurance review. That means I'm getting ready to teach you another policy. Term insurance is temporary. Term insurance has the lowest cost. What does that say? for the highest protection. Term insurance has no cash value, no living benefits. The only time anybody can collect on your term insurance is you have to go to God. Okay. Otherwise, the insurance company is going to keep making you pay. Remember what I said at the beginning? You live, you pay. Insurance company's not going to pay until you die. Now, I want to talk about this highest for the least cost, because that shows up on the question. Here's an ideal candidate for term insurance. You've got a dependent family that's going to need significant amount of money. Maybe you want to pay the mortgage off for them so they're not stuck with debts. So you're talking about a large amount of insurance. You're young and you don't have a lot of income to buy the policy. So what I just said is, I need a lot of insurance for the lowest possible cost. That says term. Okay. You probably don't listen to radio. No one listens to radio anymore, but the radio, you hear these life insurance ads. This guy said, I can get you $1 million for $30 a month. Term insurance, especially when you're young, you can get pretty large amounts of insurance for less than you pay for cable. Okay. Now, as we get to age of wisdom, right, Margie?
Yes.
Those numbers don't quite sound the same, but it's still not prohibitive. Term is always going to be less than a permanent policy, because let's just tell the truth. Insurance isn't magic. Insurance companies make a profit. They make money. They're not charity organizations. They know the math. You know, the percentage of death benefits they pay out on term insurance is incredibly low. It's not to say they don't pay. I'm saying people outlive them.
Yeah.
Okay. So, but that doesn't mean you shouldn't buy them. Holy cow. If I got 2 kids and a spouse and they need income, and some drunk could hit me on the way to work, and then they're suffering financially, and I can get, $500,000 for them for a reasonable amount of money. It's just term, but I feel a lot better because I did it.
Right.
So term insurance has a good place. This is never a course to tell you which policy is best. Every policy fits somebody. So that's why they exist. Now, this ends our discussion on term insurance. So you want to make sure you understand these 4 things. Lowest cost for the highest amount of protection. It's temporary. It's going to run out. And it has no cash value. That's term insurance. And then, of course, you got to get understanding 10, 20, 30-year term, which one's the most. You got to figure that out. The longer you want to lock in the company, the more you're going to pay at the beginning. And that's the important part, because 25, if I buy a 30-year term, 25 years from now, I'm still paying that same amount. Now it's quite a bargain.
No kidding. I'm glad you.
It hasn't gone up. All right, let's move on. It says here, oh no, I'm not moving on. Term insurance features that you'd be familiar with. Renewable. Okay, this is English. This is not insurance language. Renewable means you can keep it, but you're going to keep it. You're going to renew it at a higher rate because you're older. Okay, so if I buy a 10-year renewable term, that means I can keep my insurance 10 years from now. They don't ask me. Renewable means they don't ask me any health questions. I could have stage 4 cancer and they got to let me keep it at the same standard rate I bought it at. It's just that I'm going to pay at the new age. Okay. You pay at your attained age. So renewable means I can keep the policy if I want to. It's really up to the insured, because the insurance company is saying, we will renew you. And a lot of times they'll say renewable till age 65 or something like that, but it'll say it right in the policy you bought, how long you can keep renewing it. Now, the second one you got to know is convertible. One of the problems we have with this insurance test is it's a foreign language.
Yeah.
We don't talk like renewable and convertible at the dinner table, right? But we have to learn these words. So let's crack it down to what, do you guys know what it means to convert? Forget insurance, just to convert. You know anybody who converted? What did they do?
Changed.
They changed. That's all this means. It means if you have a convertible option in your term, and you can buy term with renewable, with convertible, without renewable, without convertible, right? But if you have a convertible option in there at your choice, you can change that without asking any medical questions. You can change it to a whole life. Now, whole life's higher than term, but they got to let you do it. Okay. So I have a client, he has bought a policy when he was in his 30s and it's convertible. He is today uninsurable because he's morbidly obese. Okay. I can't get a company to take him. And his policy is going to expire in 5 years. But I told him, Kent, you have a conversion option. What you got to do is bite the bullet and find how much whole life you can afford.
Yeah.
And we'll convert it to whole life so that when you die, your family's going to have some money. You're not going to be uninsured. Now, he has $1 million policy. He can't convert $1 million whole life. He doesn't have that kind of money. But I think he can convert 50 or 75,000. Well, that's 50 or 75,000 more than he's going to have 5 years from now when his policy disappears, right? So conversion is not for nothing. No policy is for everyone. But for this guy, he's doggone glad he has the options. All conversion says is we'll allow you to go to whole life. If you have standard rates for your term, we'll give you standard rates on your whole life at your attained age. Okay, we're not going to let you be 35 again. But no health questions asked. We are not going to ask how much you weigh or how bad your sugar is.
So when he goes to perm, you're not going to ask how much he weighs, but when does the substandard risk and all that come in?
Well, not on a conversion. Conversion, they guarantee to give you the same rate class you bought it at.
Okay, because
on a conversion, they don't even ask health questions. You tell them your name, your address, social security number, how much insurance you want, and sign it.
That's it. Okay.
What we call guaranteed issue. The insurance company guarantees to issue the plan.
Okay.
Is that more expensive?
I'm sorry, I didn't understand you.
Is that more expensive? Is that insurance more expensive than a regular term? The convertible?
It's not term. It's whole life, which is always more expensive than term. That's why I said for him, he can't afford $1 million of whole life. He can afford $1 million of term, but if in his budget, he could probably afford 50 or 75,000.
Gotcha.
And it's still a good buy,
Yeah.
given the fact that 5 years from now, he's not going to be able to buy any insurance from anybody.
Right.
Okay. So you got to know, what do they mean when they say renewable? And what do they mean when they say convertible? Okay. And either one you're exercising is going to be at your attained age, not the age you originally bought the policy at.
Okay.
So if you bought it at 35, you can't stay 35 forever. You can only stay there for 12 months.
Oh, man.
Dang it, I missed the boat a long time ago. Huh.
Most women I know claim that they can stay the same age for many, many years. So